Okay, so I'm going to be digging into American Express. I want to ask two questions first for all of you. How many of you have used American Express traveler's checks? None of you.
Not,
You're
not
all
me, sir.
you're all
No,
too
sir.
young for that. How about an American Express credit card?
No, but my
Just
girlfriend has
me.
one.
Not
Okay,
yet.
there you go. All right. Well, American Express has more brand building to do, apparently. So it's 1963, right? American Express is the one of the most powerful brands in the world at the time. The most trusted financial services company in America, for sure. It had been around for almost 100 years, and Traveler's Checks business was an absolute juggernaut. It was an incredible business. And the idea there is before you traveled, you would go to your local American Express office, give them cash, and they would give you traveler's checks, which were guaranteed paper for that amount backed by American Express. So that way, when you travel, you exchange those traveler's checks for cash in the local currency. We didn't have these global networks of ATMs back then. So it was an easy way to carry essentially cash, but without the pitfalls of carrying a bunch of cash when you travel. Now, what happened in 1963, American Express had a small subsidiary operating warehouses and issuing receipts for the commodities in those warehouses. So, for example, you'd have a warehouse full of salad oil, in this case, soybean oil, and you would get American Express to come in. They would inspect the product and issue paper that says there are XYZ tons of soybean oil in this warehouse. Then you can take that paper and collateralize it, borrow against it, trade against it. You're financializing the product that's being stored in the warehouse. Now, this business was much smaller than their consumer business, their traveler's checks business. And it was all working fantastically until a guy named Anthony Tino DeAngelis from New Jersey decides he's going to pull one over on American Express. Okay, he decides to fill his tanks with seawater while claiming that they were tanks of soybean oil. Now, when they would come in and test these tanks, it sounds like they would only test kind of the top couple inches. And of course, if you put seawater in a tank, the oil is going to rise to the top. So you can, pretty easily pull one over if they're not dipping their implement deep enough into those tanks. So he used these funds from American Express essentially to gamble, right? And he had quite a scheme going on. That's a whole separate talk that you guys can dig into. But effectively, he gambled with the money. He lost it all. And so the creditors, of course, he's not able to pay them back. So they come after these tanks in the warehouse of soybean oil. And of course, they discover, well, it's not soybean oil in the tanks, it's seawater. So in the end, it worked out to about $150 million worth of fraud, which is, I don't even know what that would be in today's dollars, but it was a massive operation that this guy was running. So of course, Amex is on the hook, right? Because supposedly they verified that there was salad oil in these warehouses. So of course, this rocks the stock of American Express. It dropped over 50% once the news broke that this was happening with one of American Express's subsidiaries. And there were a bunch of analysts that predicted that the company wouldn't survive this. So Buffett looks at this and thinks, well, how true is this, that Amex is in danger of going bust because of this? So what he did, he hired people to go around Omaha and New York City interviewing customers of American Express about what they thought of the business. Have you heard about this salad oil scandal? Are you still using traveler's checks? Are you using the credit card? He wanted to get a sense, is this actually tarnishing the brand, or are analysts kind of working it up? So he figured Amex can easily absorb all the losses just with the cash that they had on hand. They had $200 million in cash on the balance sheet. And, like I said, this was around 150 million of fraud. They also had over 500 million in float from the traveler's checks business. Okay, that was a big part of what drew Buffett to American Express in the first place. You collect cash up front for these traveler's checks, and you don't have to pay that out often for many months, sometimes never. So it was similar in a lot of ways to an insurance business in that way. So Buffett made a huge bet on American Express because he thought, the situation with the stock crashing more than 50% was totally overblown. At the time in 1963, Buffett partnership had 17 million in capital. Buffett put 3 million right away into American Express. That was like his first entry bet with Amex. He eventually put 13 million into American Express and owned 5% of the company. That was a 40% bet at the time, 40% into American Express. And of course, the next year, American Express settled the case for 60 million. So it was originally thought it might be 150 million. They talked it down to 60 million, and the stock went through the roof. So Buffett made 2.5 times his investment over the next 3 to 4 years. So on 13 million, he made 2.5x. The big mistake that Buffett made, though, is he sold it all once he made 2.5 times. So, of course, I think it was like 1994 that he got back in and bought like 10% of the business in 1994. So if he had simply held that original 5% stake, that would have worked out a lot better for Buffett. But, the nice thing is he really understood the business. He followed the business over those decades since he originally bought it. And it's done well for Berkshire Hathaway since. So yeah, that's American Express.
Do you know out of curiosity, what the return compounded over that time period was? I'm curious what kind of error it was.
Yeah, I looked at what would it have cost in 94 to buy 5% of the business versus what he paid in 1963. And it would have been like a 13 or 14% compounded rate of return over 30 years. So,
oh, wow.
Yeah.
I'm trying to wrap my head around that, the size of that fraud. $150 million then. I did a quick inflation calculator. It's well over $1 billion. It's just in today's dollars. It's just nuts to think about a fraud of that scale. I guess we had plenty of it in 08, which was to be the source of another deal soon. But
yeah.
So how much was the business worth? How much was American Express worth at the time?
Well, let's see. He put 13 million in for 5%. So 13 times 20. What is that? 260 million, say.
Yeah. And it's worth over 100 billion today, I think.
100 billion.
And the fraud at the time was worth almost the entire company then. So like that had to be crazy.
Which is why people were
no
pretty
wonder
freaked
the
out
stock
about it.
popped when that was cut in half. It's like, oh, you got a quarter of the business back, basically.